Welcome to ForexTV.com. It's Thursday, November 1st. I'm Remy Hokie of your New York Forex Market Buzz. In the North American afternoon session, Euro-dollar is trading at 144.48 as of 1:45 p.m. Eastern Time. Meanwhile, sterling dollar is at $2.0825 after sterling topped another multi-decade high at $2.0873 earlier. And dollar yen is at 114.85. Briefly in U.S. economic data, the ISM reported that manufacturing fell to 50.9 in October, the lowest in 7 months. And September personal incomes rose 0.4% month-on-month, and personal spending by 0.3% month-on-month. And the core PCE price measure was unchanged at 1.8% year-on-year. Joining us now is Jay Bryson, global economist at Wachovia. Good afternoon, Jay.
Good afternoon.
Thank you for joining us today.
Thanks for having me.
Well, in today's session, U.S. equities have tumbled on earnings reports and financial concerns, and we're seeing the major indexes down in the session after the post-FOMC relief rally. But now that the FOMC event risk is over, tell us about rate differentials weighing on the U.S. dollar.
Well, up until today, when the equities tumbled, and now bond yields have returned to where they were before the FOMC. I mean, I almost thought that would have been a dollar bullish sort of signal. I mean, yesterday we saw the yield on the two-year Treasury rise about 10 basis points or so yesterday. I mean, just the whole curve shot up yesterday. And with the dollar just, over the last few weeks just kind of getting pounded, I would have thought that some higher rates would have given perhaps the dollar some stability. Now, again, we've seen that kind of dissipate today with equities coming off. But if equities can find a floor at some point, you should see rates start to move back up, and that could give the dollar some at least near-term stability.
Well, Jay, you have just highlighted some of the fundamentals, but if we can move on to technicals, ahead of tomorrow's non-farm payrolls release, what ranges do you see for the U.S. dollar against the other major currencies?
Well, I mean, if the consensus forecast for tomorrow is around, let's say, 80,000 or so, okay? If it comes in weaker than that, I could see in the near term euro dollar spiking up into the 145s. British pound probably going to make a shot at 209, and Swiss going down into the perhaps even as low as into the 114s tomorrow. So that's if it comes out weaker than expected. If it comes out stronger than expected, and people start to think that, okay, perhaps the Fed is on hold for some time, then I would think that you're going to look at euro going back into the 143s, dollar yen going back up into the 115s or so, and the pound coming off, and the pound could come off quite hard in that case and move down into the low 207 area.
Well, we've just covered the major pairs, so let's move on to the crosses. Euro sterling has come off 3-week lows hit earlier in the session, and also large buying of sterling yen has affected the yen crosses. So what levels can we expect to see for euro sterling and the yen crosses?
I would think that they're going to pretty much, trade in a range. The low today in euro yen was, down around 165 or the figure or so. I could see it. I think we're just going to continue to chop around in the 165 to 167 sort of level on euro yen. Euro sterling, again. I think we're going to just kind of chop around in these sorts of levels in the 69 sort of area that we've been in.
Okay, as we near the end of the New York session and near tomorrow's morning session, we do have the non-farm payrolls figures as well as the unemployment rate coming out. So if you could tell us about other event risk in the upcoming sessions and what Forex traders should be focusing on.
Right. I mean, obviously, that's going to be the biggest one. And then as we move into next week, the event risk would be the surrounding the policy meetings in Europe next week. We've got both the ECB and the Bank of England meeting next week. Now, the market expectations is that, and I share these expectations, is that neither of these central banks will do anything. If someone's going to hike next week, it would be more likely to be the ECB. Again, I don't think that's going to happen, but they would be, I think, more likely to hike than what the Bank of England is. And so if they were to hike, I mean, that could, cause euro to continue to charge ahead. So that would be the event risk for next week.
Okay, Jay, thank you very much for your insight and analysis.
Okay. Okay, thank you.
That wraps it up for Forex Market Buzz with Jay Bryson, Global Economist at Wachovia. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.